Ladies and gentlemen, what's going on? And welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. It's another Friday. So I, Jermal Chandler, am joined by the illustrious, the one and only, the man, the myth himself, Dr. Data. What's going on, man?
Hello. Doing well. As you mentioned, it's Friday the 13th.
It is, man. We're going to talk about that in a second, too. But I want to welcome everybody to the show. As you can see, we're going to talk a little bit about some of the trades that we've been looking at. And you know what? Before we get into it, I do want to set up the environment before we start talking about trades, because I think this is key. Understand, we're sitting at 4,000 on the S&P 500, or at least on the futures right now. I mean, SPX is also nearing 4,000. I want to direct your attention to this. Volatility, VIX, 18.23 is basically where we are right now. Things are fairly low. For those of you who tuned in this morning, I hope you tuned in this morning. If not, you'll see it later today on the whether it's on the YouTube page or whether it's on the website. For This Week in Stocks, I showed one of the mini montages, which comes from Dr. Data himself, from our research hub that we have. Get so many great things from there, but one of them showed the current state of volatility for a lot of the ETFs right now. And if you look, and you'll see it, most of them are below 20, let alone below 30. And so it's a lower volatility environment. So we took it upon ourselves today to try and find a couple of trades in a low volatility environment. I mean, that sounds like a good idea, right?
You know, we said originally 10. Let's come up with 10 trades. But I think we should come up with 13, and I think we should count them. I think we're going to have a little bit of change of plans here.
All right, I'm cool with that. That's a serious challenge. You're throwing down the gauntlet, man. Throwing down the gauntlet.
Okay. I got 8 already. So you got 5.
I got 5.
Yep.
For those who are watching the show, if you watch on the Tasty Live webpage or the Tasty Live app, you can go to the Tasty Live YouTube page. Dr. Data and I are there. Join in the chat. Jump in. My man George B is already in the chat. He's playing some intraday stuff today, apparently. But jump in, throw some characters in the chat. Please do, man. Get in there, make it lively. We'll jump in every now and again, too, with any questions you may or may not have. But dude, before we get started, I'm curious. It's Friday the 13th. Are there movies that scared you more than normal as a kid? Like, are there any horror movies that you were like completely terrified of?
Okay, so my first one that I remember being scared about was actually a cartoon, Scooby-Doo. And you know, at the beginning, the beginning of Scooby-Doo, right? There was the skull. And it was the skull, and it would like with all the lights in the background of the skull. And it was just, I'm talking about the introduction, right? Scooby snack. That's a fact. Well, it was that skull. I remember just being terrified of that skull. So I would cover my ears, put a blanket over and then I would watch the rest of the Saturday morning cartoons, right? But it was always that first introduction. I remember just being so scared. So that was the first one, right? Yep. And then Halloween, that was scary. Texas Chainsaw Massacre, that was scary. Just growing up, part of my life, at least in Texas, you heard about this event of some crazy person. And so that was kind of like somewhat based on a true story, sort of, kind of, without all the, babes in the bikinis and stuff like that. But anyway, you get what I'm saying. That was another scary one. Hellraiser, that was scary.
Hellraiser was scary as hell. Pinhead was scary as hell, man. Yeah, Pinhead was scary. So that definitely, so for me, it starts off with Friday the 13th. Oddly enough, it's the messed up part. It was that we went to visit my aunt. This was I was 5 years old, I think, or 6. We went to visit my aunt. I think that movie came out in 1980. So it was a couple of years after it was on tape, and we rented it. We were visiting them out of town. It was me, my grandmother, my cousin, my brother. We're visiting. We're from out of town. We're just hanging out. They decide they all want to watch this movie. It was my aunt and my grandmother, my brother, and a couple of other people were there. Let's watch Friday the 13th. That'd be great. Yeah, cool. They sit down and watch it. I'm in the other room. I don't want any part of it, right? I'm not interested at all. I'm 6. I shouldn't be seeing that anyway. Well, what happened was that was the only thing going on in the house, right? Back in the day, if there was a movie, there's one TV. That's it. So it was so loud, and I'm hearing all the noises. I'm just like, I might as well be in the room with them. Like, I don't. What's worse, hearing like screams from another room, or being in the room and knowing what the screams are about? So I went in the room, and I kind of, I picked up every now and again, but it was kind of like forced to watch this movie. I had the worst night of sleep in my life. For the next 10 years, I was completely terrified most nights to go to sleep. And I honestly didn't get over it till I was like teenager. And I finally sat down and I watched one of them. I just sat down and watched one, and I got over it.
So at about 44, a few years, you got over it.
No, I was 15.
I'm just kidding. Gosh,
Okay.
that would have taken me years to have gotten over it. If I got scared over Scooby-Doo intro, gosh. I got the first one. Okay.
This first one.
Okay. Dominion. Okay. Look at D. Dominion is D. That's a utility. It's got a 4.71% yield on it, dividend yield. It does have earnings coming up, but hey, the whole idea, if you care about dividends, you're thinking about long-term anyway. The reason why I like long call is because you are getting the dividends and because you are participating in the long-term growth of the company, and it's kind of an interesting company for me. So buy 100 shares I would buy 100 shares of that right there. It's going to cost a little bit of money, $3,100. And then I would sell and this is always kind of difficult, right? But probably about a 65 or 67. So I would go kind of further out. And that's just a continuation of a little bit of profitability of it. So, right, like.
When you say further out, you mean call or expiration?
No, the call. Right. So I would do the 35 days. Yeah. I would do the 35 days out. And then I'd probably sell like the 67 and a half, or if you look at let's look at that for a second. 65, okay. If you're bringing in $1.10, and let's say the real rate of return on that would be $1.10 times 100, right? Mm-hmm. Times 100, okay, $110 over the amount that you're having to put up, which is 30/40, okay. Now that's about a 3.6% return on that money, which is, it's money, right? But you're also able to do this 365 times over 35. So assume that you're doing that. That's about a 37% return investment annualized, right? Which is unrealistic. You're not going to get that kind of return. Plus, it can also go up, so it can actually be higher than that. But it's just one way that I like to think about some of these trades. You're able to accentuate that return that you're making on that stock. If you multiply close to 5% times 6,400, which is the real cash value of that stock, that's $300. So $300 a year of dividends is what that stock has. People say $300 a year, that's not that much considering it's over the course of a year. But if you divide it out by 12, that comes out to $25. So you're making, what I'm saying here is you're making $25 per month on a dividend, and a dividend of about 5% is quite high right now. But you're making $25 a month. All you have to do is make over $25 a month in premium received or theta decay, and you're doing just as well, and you're able to accentuate your return even more. So the point that I'm making here is that you actually could realistically have a 10 to 15% return in this stock without taking that much risk and without taking that much volatility in an account. It's one of the reasons why I like some of these plays.
And so just to keep it simple for the people, mm-hmm. In this case, we bought 100 shares at $63. We sold the 65 call for $1.10. That's where we're getting this 61.90, 63 minus 110. So that's where we get the 61.90. And this is the P&L graph right here. So this is what Doc is saying, basically, if you continue to try to do this every month, this is where you potentially get that annualized number that he's coming up with. But just for the sake of today.
So not only the dividend received of 5% annualized, but also you're able to accentuate that even a couple times more by selling premium against the account. Cool. So this is kind of something for dividend players, an accentuating way of dealing with cash flow for a dividend player.
Okay.
It's interesting.
Cool. Good one. Good one.
Okay, so that's number one. Now you go.
I'll go. For me, I'm not as sophisticated as you are, man. For me, it's just the idea of selling Tesla on a day where it's down. This is one of the few where IVRs are up. Whether or not, this has been the tough part. Like, you're not going to necessarily get the 1/3 of the width of the strikes, but just selling this for 217 for the time being with the 105, 105. I am doing the 24 delta in this case with the hopes that the stock moves around. Honestly, I've done a trade like this. I did it early last week when I just came back from being out, and I was able to sort of scalp. I closed it out for 40%, and I think this is one where you do kind of have to actively manage and pay attention to it because Tesla's moving around so much. It's such a newsworthy situation. It's down today based off of cutting prices, but
I like it.
That's where I'm at.
I like it. I like it. It is really far off its lows. So we got two, number three.
I'm sorry, just real quick. I forgot I should show the curve. You guys, just so you can see what selling the spread looks like for those who aren't familiar with that. But of course, let's make it easy numbers. 215. That gives you an idea of your break even, which is should be the strike that you sold 105 minus 215, which what is that? 102.85, right?
And this stock is going up, so therefore the green is on the plus side. So this is a bullish trade.
Yes.
Okay, let's look at the next one. EWZ. Okay, so the old
EWZ
president
is one of the few that's fairly high vol.
It is.
The ETF chart that we talked about.
So we have some kind of craziness going on right now within the political sphere of Brazil. The old president looks like he liked to use the credit card a little bit. Had some purchases on there that did not look very good. Anyway,
in Florida, because that's where he's hanging out right now with Liz. Actually, I think.
Yeah, sure.
I say with Liz because Liz, I think she's supposed to be either already or vacationing down in Florida at some point soon. And I think she said the guy is like staying not far from where they were looking to stay. It's kind of interesting.
Oh, funny. So EWZ. I did a 27.32, and I talked about this on Trades and Research. I've already a little bit of money in it, which is kind of cool, having just put this on yesterday or the day before. Thursday. Thursday was yesterday. So up $15 on this trade. I still like the trade and did this in my own account.
You did the 27 what?
I did the 27.32. But let's
strangle?
Strangle. Yeah.
Look at you, man. You don't always do strangles, huh? Okay.
27.32. Yeah, and both right now are actually about 25 deltas, which I still like it.
Mm-hmm.
I probably kind of like it better now than actually when I put it on, where it was a little unweighted here a little bit. But I like it.
This one has a 60, and for those who haven't seen our research a whole lot, the strangles typically will give you a higher pop, just because obviously you usually will see higher pop when you're selling naked options. One of the reasons why I think, and don't let me put words in your mouth, you're looking at the idea of selling a strangle in this because it's an ETF, and although it's been somewhat volatile, ETFs on a scale are way less volatile than single stocks, and you don't have to necessarily
100%
with single stock information.
So this one right here, you can make money if the stock doesn't move very much. Since you're bringing in about $1 worth of credit, you'll make money as long as it goes between $26 and $33. Is one way to think about it.
Yep, absolutely.
Okay.
Cool. I like it.
So we got number 4 now. Working on number 4.
What do I have? Oh, you know what? I'm going to go here. This is one that I've been eyeing up. And
gold, yeah. I like it.
Gold has been, this is one for the people who are momentum people are going to like this one. I should probably move it. So right now, most of my charts I've been looking at are 6 months. One of the reasons why is I'm trying to eliminate a lot of a lot of the charts that we look at are reminiscent of 2022, and we all know what happened there, although gold is an animal. But I'm explaining why my charts are on 6 months. But if you look at just kind of a 2-year chart of gold, just to get an idea, gold is kind of breaking out for those who are momentum people. And so I like the idea of trying to see where this trend goes. This is a very low IVR right now. And typically, I guess my hope is on the trade that I want to do is at some point, gold volatility will catch a bid as gold is continuing to go up. That's kind of how commodities pretty much work. Usually when they kind of crash up, right? Equity stuff crashed down, and that's why volatility kicks in. So I would be interested in doing the 172. I like to do wider. You can do closer if you want, but I like the idea of doing the 172. I could do, I guess I could do 185. You could do a couple. I mean, I kind of like the idea of I like doing round numbers. So whether it's 10 wide or 15 wide, in this case, this is a 15 wide strike. I'm buying the 172 call, selling.
So this is about a 50-50%
exactly.
Thing right here. You're doing a debit spread here, debit call spread. In other words, you're paying money for this trade. You're not receiving money, but you're paying money for this. Therefore, it's a bullish trade. And you're doing it only because implied volatility is really quite low with it. And you're hoping to not only make money on the direction, but also having a little bit of the vol movement there.
Absolutely. And in this case, your break even is the lower strike plus the premium you're paying, which is in this case is 179.15. That's break even and needs to be above that. We're at 178.80 right now. So, that would be my play.
I like it. I don't like it as much as 6 months ago, obviously.
Yeah.
But I like it. Okay, I got another one. This one right here is an Amazon synthetic long with short call financing it. Okay, so reason why, just queue up here, Amazon 100 shares. Just queue up. Okay, look how much it takes to purchase that, right? $5,000.
Yeah.
Okay. Now let's put on a synthetic. Okay, I'm get rid of that one, and let's 35 days away. Okay, let's buy that call and sell that 95 call, right? And this one right here, the amount of
So same risk profiles you guys just saw.
Same risk profile.
Much
exactly.
Lower.
But you're using half of it. And that's the reason, because you're only having to put up 25% of it rather than 50% of it.
Okay.
And which is interesting. It doesn't require that much. So you are using the efficiencies of the ways that the modeling is done for this and what's allowed by law. So, and then you go with the trade. Okay, and then you would sell this is one of these things where it's kind of like, okay, what do you think, right? Maybe the 105, 105 call, all right? I like that right there. And so that has about $1,000 worth of profit potential in it. And that's why I think it's kind of interesting. So you're basically just taking
when you see this max loss, something like this max loss can look daunting, but I mean, this is the idea of Amazon going to zero. Do you think Amazon's going to zero tomorrow?
Yeah.
Right.
Exactly.
So keep that in mind with it.
This is one way of saying this is not a poor man's covered call, but this is another way of thinking about a poor man's covered call, which in that case it would just be a long in the money call. Financed by a call. This is you're just doing synthetic with a call to help finance it.
I like it. I'm curious. Why are you interested in getting long Amazon? I think that's really the question. More than the trade.
So, yeah,
not to put you on the spot, but I think it'd be good to know. I'm
think
actually
it is
long
good.
Amazon. I was just curious why you are.
Yeah. So I almost consider Amazon right now as like a staple, right? It's not, but it feels like a staple in a lot of ways. No, actually, I think it probably is considered a staple.
Mm-hmm.
But yes, it's tech. It's kind of hard to determine what it really is in a lot of ways, right? Because much of the internet is built on Amazon AWS servers. It's fantastic. It's something I use constantly at work here. But then they also have the consumer goods that they sell, right? Items. Look how many packages there are all over the place. This is something that's not going to go away anytime soon. Yes, they're having some problems with unionization of some of their factories. They probably hired too many people when the times were good, when COVID and everybody was shopping from home, but I don't see that stopping anytime soon. Plus, considering that it looks like the inflation numbers are going down, that should spur some more purchases. In an upward moving market, I would think that Amazon should do pretty well.
Cool. Well, you know what? I know We got 7 minutes. We got 6 minutes.
Okay,
I do want to answer this question because somebody asked, why does your buying power say 3,040 and mine said 6,185? Michael Williamson asked. Michael, that's because of the margin account, right? So when we did that for the buying power you saw is based off a margin account. And I'm guessing in your case, if you don't have a margin account, if you do, and it doesn't look like that, then check with the Tastyworks team and see why. But
yeah, it could be that you just have a too small of an account where you don't qualify for a margin account, or also it could be that you just set up your settings in such a way that you only have access to that cash because that was a setting that you had selected. But you might be able to get that changed.
Okay, in the interest of time, I'm going to stick to Amazon because, like I said, this is a trade that I have on to some degree as well, and I've altered it actually over time. So I initially came back in from the end of the year, and I put on a calendar spread, and I've had to move it because Amazon has been on the move. I think the current one, and this is one of those where I like the idea of, you can see sometimes I do look at the moving averages. Right now, the next moving average is 100-day moving average at 105. So I like the idea of being long the February 105 since it does capture earnings, and selling the 2-week out 105 call. That is $2.41 on the current call spread. Now, these aren't the sexiest things, call spreads, but I like buying them a little bit with a bias. So in this case, my bias is let's ignore that. It's another trade I closed out. My bias is upside. Buying a calendar spread, and I like buying calendar spread that specific, strike. So in this case, I chose that 100-day moving average strike.
It's also a high price stock, and that's kind of an ideal thing to do with high price stock. With a higher price stock, you can't really make money when it's a diagonal, or it's a calendar when it's in a cheap stock.
Yeah.
Right. Also think with calendars, it's like a mullet. It's short in the front, back, long in the back. Right. That's how I always remember it. Short in the front, long the back.
I be honest with you, one of the reasons why I didn't like these in the past is because this doesn't really tell you much, right? Like this P&L graph. But really what you need to know is that you want the stock to slowly grind up to that prior to your short strike expiration, and to this Jan 27th. I wanted to slowly grind up near 105, but not quite pierce 105. And then that rolls off, and then theoretically I have a long call in February, which captures earnings in this case, and hopefully it continues to rise more. So it's all
I like it. So let me give you 3 of them. Okay, Nasdaq, the Qs, okay. Short 30 delta put. Okay, 35 days out, short 35 delta put.
35 delta. So let's 272 is fine. It's 33.
Yep, I had the 270 on myself.
Okay. I'll move
also, Russell 2000. This is one of these things where it's IWM. Mm-hmm.
Yep. Oh, just so people see, that's 4,500 in buying power.
Yep.
On $200 stocks, pretty good.
Yeah, it's again. And then also with IWM, this is a short put ratio, right? So you do 2 puts. I kind of like to spread them out a little bit, and then you buy 1 put above the market. So you sell 1 put, like let's say the 180, 184, let's say, as well, and then you buy like the 187.
Oh, you didn't sell 2 at the same strike. You sold the 180.
Yeah. And
then the 184.
Yeah, it kind of split.
Okay. So yeah, like a put tree. This is a put tree. Yep. I like it. I do like these. I do like these. So what we did here is buy 1 at the money put. We sold 1 out of the money put, 40 delta, and then we sold basically 30 delta put. So this is the same thing as doing a ratio, like Doc said, or like what some people call a put tree. And this one, you see these before. These are kind of unique in the way that you see the P&L graph on these. Hold on.
So this is one of these things where it's like you're saying, hey, I'm long it, but if it goes down, I'm still going to make money, and I'm going to actually make a little bit more money if it goes down. Like, I think it's good to start building up the position, but I don't love it here. But I still want to take on the position, so even if it loses a little bit of money, in other words, goes down, I'll actually make more money. Mm-hmm. So it's kind of a weird way of looking at it.
And then I'll give you the 184 and the 180, so you actually have the ability to profit all within this wide zone here.
And then there's a few others. I'm going to give you just no, 1, 2, 3, 4, 5. I'm going to give you 5 ideas here as well, and I guess that counts as some of our trades here, right?
Absolutely.
I'm going to give you XLP. These are all stocks that I like. XLP.
XLP? The oil
XLP. No, XLP.
Oh,
X-ray Larry.
Consumer staples, right?
All. Yes. It's interesting, right? It's staples. It's boring. Just hold on to it. DG. Dollar General. You still like it. Costco.
Wait, what are you doing in Dollar General? Anything particular or long?
No, just own it. Own it.
Oh, just own stock. Okay.
Yeah. Either own it. Let's just get cheap here. Just buy a few shares. Just gives you something to take a look at. You know, it just gives you something to look at. You know, you don't even have to buy 100. Just buy a share, buy 2 shares. You know, and then over time, you know, you eventually build up enough where you can sell a call against it. Right? Boom, done.
I like it. XOP, DG,
Costco. I like Costco as well.
Man, how can you not like Costco, man? They have it all.
They do. It's expensive. It's expensive here. You know, every 100 shares it be $48,000, so it's expensive. But it's one of these things where
too. I mean, I spent a bunch of money the other day when we went, but you know what? We haven't eaten out.
So a few things that you can do. One is you can just sell like a short put spread here, short put vertical. You know, you're doing it for a credit. And so therefore you just do it slightly below the money, and you can make money on the upward movement of it.
Yeah, you know what? You're right. I do like one like this, but I wouldn't mind being a little closer. 258, 34 Delta. Yeah.
And then there's one more.
Yeah, last one.
No, Target. Target's kind of interesting.
TGT.
Also like Target. TGT.
Yeah, and this was the move from last fall, and there's all the inventory stuff with Target and Walmart, but it's been treading water. It's been quiet recently. I think it's going to rebound at some point.
Mm-hmm.
Also do. Mm-hmm. It's another one where you can
I like both those.
Get a couple shares or sell. I mean, vol is kind of low right now, IVR, but
have a long enough time frame on all these stocks. You know, just have a long enough time frame. I'm not saying,
like it, man.
I'm not saying be hold on to them forever. No, not at all. I'm not saying don't be active. I'm just actively participate in those stocks.
I like it, man. Good stuff. Thanks for coming on as always, man. Lots of fun, man. Lots of trades. Good trades. There's a bunch of stuff we had in there. So do with it what you will, folks. Thanks for watching Engineering the Trade. Thanks to my guest, Dr. Data. And as always, be smart, be patient, trade small, trade often. Have a good weekend, folks. Peace.
Love it. Thank you.